the trading desk of DailyForex.com. This is Christopher Lewis looking at the upcoming April 1st Forex session in the euro-dollar pair. As you can see with the euro-dollar, we had very little movement on Friday, and this would have been due to the Good Friday holiday. Liquidity was absolutely horrible, especially once you got past the Asian session and into Europe and most decidedly North America. Having said that, you could almost write this candle off as nothing. It's probably more or less companies that have to do business, international transactions, and the like. So speculative bit would have been taken out. However, this chart signifies something that we all know, and that's that the euro is obviously in a massive downtrend. What's interesting, though, is the fact that during Thursday's trading, we managed to stay at the 127.50 level, which is roughly the beginning of the cluster that forms the backbone of the support at the 127 handle. I believe the 127 handle is very important, and if we break through it, this could really start the punishment of the euro. But think about what's going on. One of the biggest problems we have, and that would have been announced somewhere right about here, is that the Europeans have decided that depositors can be responsible for recapitalizing banks, and the Dutch Finmen actually said that might be a template going forward. Now, they've since walked it back, but now that they've done it, and they have done it, granted it's the larger accounts is what they ended up with in Cyprus, that sets a precedence that a lot of people are not going to like. And because of this, there's going to be a lot of distrust of European banks. The fact that they had done this really short-sighted move in Cyprus, at least in my estimation, will more than likely plague the euro for quite some time. Add to that the fact that Europe is facing recessionary headwinds and the United States is at least doing better than that, not much, but it is. Money's going to flow into the United States. The simple question is you have to ask yourself, if you had $50 million as a firm or a wealthy individual, would you feel safer with that in a place like Lisbon or a place like New York? We've already set the precedence in Europe that you could be hit very hard to recapitalize banks. Now, this also creates a flow of money out of the peripheral countries that have trouble with their banking system and into places like Germany, certainly. But the biggest problem is if those countries start falling apart, that really could hurt the Germans in the end as well. So you see a lot of cross-channel flows too, for example, over to the UK. Going forward, I suspect that this pair is going to offer a lot of excellent selling opportunities, and I still believe that the 130 level is significant. A bounce from here only gets me looking to sell up there on a resistive candle. There is a ton of selling pressure just above that too. So I think we're starting to see that the euro wants to hang out in this general vicinity probably for the next month or two, and then we head into the summer months, which of course the markets just get really quiet unless of course there's some type of financial meltdown, which we can't rule out actually at this point. But all things being equal, the markets will be relatively quiet through the summer, very range bound. So that might be what we're trying to do is simply find a range and figure it out in the fall. A lot of people think that things will be better in the fall, but we keep revisiting this Europe thing, and as far as I can see, it still hasn't been fixed. So rallies will eventually offer a nice selling opportunity. I believe 130 is the first area to watch, and above that, you could probably follow it at just about every handle.